Good morning, it's Jonathan Barrett with the morning debrief. It's Friday the 11th of the 11th, it's Remembrance Day, and the market volatility certainly remains with us. Interesting, last night we had a bit of a faux pas on France's credit rating by the S&P. The S&P sent a message that it was downgrading its AAA status. At the end of the day it turned out to be an error. But the market had a bit of fun trying to work that out. Obviously, quite a costly exercise if you don't get the information right to the market. Okay, let's run through just a little bit. A good strong night on the Dow, reversing some gains from yesterday's losses. It was up 0.84%. The S&P was up 0.72%, and the Nasdaq up 0.07%. Looking around the news, I guess there's a little bit of a problem there. This is interesting. Thanksgiving meal costs jumps 13%. Ben Bernanke said inflation remains relatively benign. Let's see. It's a little bit interesting, I think, from that. Anyway, US Treasury still remain, that's Bernanke's comments there, sees low inflation. Bernanke also says, obviously, US government bonds are obviously the key there, still a safe haven. As a result of that, US dollar remains relatively well bid. Okay, looking at stocks, Euro advances, Greece names Premier, a little bit of optimism coming to the market. That's all part of it, which is good. US consumer confidence holds, which is good. It's holding, which is at the lowest levels. Also, we saw reports out of the EU in terms of next year's confidence, in terms of next year's GDP in Europe, and that's shrunk from 1.1% down to barely 0.5% growth. And that, I think, sums up the concerns. I think they'll be lucky for that. Recession risk rose for Eurozone. We just talked about that. Swiss pleased to raise franc cap. Failed to sway SMB on credit debt issues. Bit of a concern there. Bank of England keeps rates a little bit keeps rates unchanged there. I guess that's pretty much one interesting thing of note, which I will quickly chat about. China, in terms of its imports of food stocks, is getting close to some areas critical levels. This could have an effect on food inflation in China. We have noticed that they're out there looking for more corn. Corn supplies remain very, very tight in the States. Expectations are for that to remain for some time. Should help prices remain relatively well supported. Okay, let's go through the markets. And first of all, stock world indices. And you can see there that a little mixed across the board. Dow was pretty strong there. As you can see, top 50 was up 5 in euro. FTSE was down 15. The CAC was down 10, and the DAX was up 38. A little bit mixed on that front. Looking through the local market, and our SPY managed to etch out a small gain. There it is, up 26, 4,290. So that's pretty positive news on that front. Okay, having a quick look at the commodities markets. And you can see there that crude was up a little bit. Concerns, obviously, what's happening in Iran, concerning its nuclear program, remains quite a concern for me. Brent crude was up 1.12. West Texas was up 2.16%. We also had a draw in inventories of about 1.4 million barrels. That also kept the market relatively well bid. So that's not too bad at all. Expectations still remain as long as we stayed over that $95 a barrel for US 100. We talked about that in the bulletin, and that certainly remains on track there. There's too much news that suggests, and it is a concern for me in Iran. Just remember or Google Straits of Hormuz, 13 tankers a day, 35% seaborne oil runs through this. If there are any heightened concerns there, that must concern supply of the commodity to the market if there is any further concerns. We are expected to see significant trade sanctions imposed on Iran as a result of their nuclear program. Okay, on the agricultural front, looks pretty red except for a few bright spots. Cotton was up a little bit, indicating that it's still around this level. As we have talked about, this we feel is a major bottom trying to form in the cotton market. We feel that given a couple of months, we should be okay there. Wheat, a little bit disappointing, down 3.58% at 620, and 600 is major support for that. Okay, obviously concerns there, in the complex. I guess corn was down 10 as well, and soybeans certainly under pressure. There are concerns. Obviously, we've got a bigger South American crop, and that in itself has basically allowed prices to come under pressure. Okay. Right, what else have we got? Copper down 7.6, 336. Interesting to see how that pans out with the bulletin in terms of the trade there, because we looked at that in terms of Elliott wave and Fibonacci. Quite interesting to have a look at that. It might pan out quite nicely. Gold under pressure, 17.62 down $29, and silver down 35 at 34. Okay, that's pretty much it. Let's have a look at a few of the markets. Particularly, let's look at the dollar index. Down 29 at 77.87 on a lift in optimism out of Greece. This is still a structural bull market, and you know, in my mind, we've still got major concerns there, and I tend to find that the US dollar will remain relatively well bid for some time. People understand we've been short the Aussie and long the dollar for some time as well. So we're quite happy for that. We just feel this looks like a major low for the currency. If things develop in Europe, more contagion, more spread, things like that, well then people will go to treasuries and will go to the dollar. As a result of that, as we know, we have been short the dollar for some time, the Aussie dollar, and although we're coming to a little bit of correction or potential for correction, I certainly feel that the trend is in place. If you are short, we mentioned the only safe place to have stops are above there. You could probably finesse a little bit more, probably expect a little bit more downside, and parity was the target there. Looking at gold under pressure, 17.59. This is a little bit of a correction. It might sit on this trend line which we've been following. If that's the case, it can spend a bit of time. A lot of us are starting to feel that we have a little bit of correction in it. For those that are long gold, perhaps picking up a put or out of the money put might save a little bit of angst, particularly in these volatile times. You will pay for it though, but certainly might be a little bit of insurance. It might be worthwhile. Okay, looking at the local market, up 24, 4,286. I guess there's not a lot you can do there, and I think it just continues to consolidate, and that's what it's doing. Spend a little bit more time going sideways in the range, no breakouts yet, and I think that's the order of the day. Okay, let's have a quick look at the economic calendar. We're not expecting too much tonight, and in the States. One thing to note, and we will just quickly look, that unemployment data yesterday in Australia wasn't that positive. You know, it dropped, the actual rate increased to 5.3%, and I think that is a little bit of concern. Full-time employment, I don't think, was all that rosy as well. So anyway, we've got a lot of the reserves there, certainly with a lot of firepower. Remember, the market's trying to factor in another 2 interest rate cuts. Okay, on terms of economic numbers, PPI in Britain's important, and the University of Michigan in the States is the other important thing. But that's pretty much about it. Well, that is about it for the week. Anyway, happy trading. Look, what can we say? A lot more volatility out there, and let's see how things unravel. One thing for those that are out there concerning the AMF Global situation, what we have heard is that well, all the agricultural futures have been fixed up. Now we've just got to turn around and see at the meeting today, creditors meeting today, what will actually happen to more of it. So if anyone needs any information on that, more than happy to help out. Anyway, take care. That's it from me, and happy trading for the weekend.